Let's start with the fact that the Chinese central bank was in there operating at the same time and apparently alongside the Fed and the ECB. Did you find that striking, or do you agree with Mr. Draghi when he says, oh, it was just the same amount of coordination as usual?
Well, I think from the European perspective, it's probably as usual, but it is quite striking that the Chinese moved almost exactly at the same point as the Bank of England. And I think the message from the Chinese policymakers was, you know what, they're cutting in Europe, they're trying to support their economies. We're doing our bit to support not just our economy, but really the global economy with that. So it was a bit of a message to the outside world, I think, that China is here ready to act as well.
Okay, now that's interesting because China clearly has provided the lion's share of global growth. What is your read on the state of the Chinese economy? Is it time to panic and feel that the engine is running out of steam?
Well, the economy is still growing around 7.5%, so it's not quite time to panic yet. It's still a very respectable growth rate, but there are clearly signs of challenges. The export sector, for example, continues to be under pressure from weaker demand in Europe, and even local demand has weakened on the back of a softening real estate market. So there is certainly a need for more stimulus, and the rate cut yesterday was probably the first in a number of steps that we'll see over the next several weeks to help to prop up the Chinese economy and therefore also world trade overall.
Okay, thank you, by the way, for picking me up. I misspoke earlier on and said that the Fed had acted. I should have said the Bank of England. So it's Bank of England, the ECB, and the Chinese Central Bank. What do you think, what do you make of the market reaction to that? Do you feel that what we're looking at is the market's expecting perhaps a little bit more on the one hand, and also worried that the ECB knows something about the poor state of the global economy that maybe the rest of us don't fully know or understand?
Well, the market reaction certainly suggests that more needs to be done, that the market is not yet impressed with what policymakers, be in Europe or in China, have delivered to date. And part of the challenge here is that, at least in China, is that rate cuts in themselves are not the magic bullet. They're just part and parcel of really a broader response that's required. You need to have a fiscal stimulus, you need to have cuts in the reserve requirement ratio, which allows more liquidity to flow through the economy. And so it's really just one of a number of steps, and the market's still waiting for these additional measures to be taken.
What do you think needs to happen now in terms of a policymaker's response to the situation that we're in? Because clearly we're looking at a fairly weak jobs report, we're looking at weakness, we're looking at slower growth in China, we're looking at a stalled UK economy, we're looking at very severe contractions on the part of several smaller European economies, and worries too about the big ones. Is there anything very much that policymakers can do? And I suppose you're going to say sort out the European debt crisis, aren't you?
Well, I think actually there's something that policymakers can do, and that is to provide a firmer commitment as to the steps they will likely take. So far, the response has been very piecemeal. If you look at China, the measures have been gradual and piecemeal. In Europe, they have delivered now a rate cut, but the ECB is still shying away from more aggressive measures. And even in the United States, we had been seeing a bit of an Operation Twist, which is just a marginal easing, but still no commitment on quantitative easing. What would be very helpful, I think, for all these major central banks to say, we step up and we're determined to do much more should things get really bad in the next 2 or 3 months. I think that would provide a much clearer signal to financial markets that policymakers are standing ready to act and not just with piecemeal action.
Well, of course, the problem there, particularly in the case of the ECB, is that they are limited in what they can do. And it seems that Mario Draghi has been perhaps a little happier to bend or stretch the rules than his predecessor was as the head of the European Central Bank. Do you think that these limitations on what the ECB can do are in effect, because of what you're saying, a limitation of what policymakers can do to solve what is now the core problem, which is the European debt crisis?
Actually, I do think the ECB does have room to be much more creative than it perhaps has been in the recent months. The LTROs, for example, were a very innovative form of reassuring financial markets, but they obviously lie several months behind us. Their new pressures have re-erupted. So there is some things that the ECB can do outside of rate cuts. Now, I agree they can't do as much as the market would like. They cannot finance governments directly. Their mandate doesn't allow that. But there are other more creative measures, such as the LTROs, which was an infusion of liquidity about 6 months ago, which would probably be helpful. But yesterday during the press conference, Draghi said, well, we cut rates so far. There's not really anything on the table to go forward, and that's why the market wasn't terribly encouraged by what it saw being delivered yesterday.